start recording this webinar. Sue, can you take us on to the next slide, please?
Yep.
As a reminder that today's presentation is for educational purposes only, final rates, products, or services should be confirmed with a credit union representative at the time of service. So without further ado, I'd like to introduce you to our amazing presenters, Brenda and Sue. With over 25 years of experience in the credit union industry, Brenda is a dedicated certified credit counselor, committed to empowering members to achieve lasting financial success. Brenda prides herself on turning complex financial challenges into actionable plans that help members overcome debt and build a secure future. Brenda's background includes roles in lending and supervision. Brenda's goals remain unchanged to drive continuous improvement and provide superior member service in her spare time. It's all about family. Sue has been part of the company family for almost 38 years, starting out in reservations with American Airlines back in 1988. After nearly 2 decades of learning the ins and outs of different departments, she made the move to the credit union in 2007. Since then, she's worn a few hats, working in accounting and mortgages before finding her true home on the financial wellness team. These days, Sue's all about helping members stress less about money and break free from the paycheck to paycheck cycle. She loves being able to make a real difference and help people feel more confident about their financial future. Outside of work, you'll usually find Sue in her yard, spending time with her family, or hanging out with her favorite sidekick, her French bulldog, Mr. Pickles. Brenda and Sue, I'll check in with you later, but for now, the floor is yours.
Thanks, Anna. Well, good afternoon, everyone. We're so glad that you're able to join us. Our focus today is helping children develop smart money habits from the very beginning, because the way children learn about money early on shapes how they make decisions, handle challenges, and build their future. By teaching kids to save, spend wisely, and understand the value of money, we're not just giving them financial skills, we're giving them confidence and independence for lifelong success. Today's agenda includes the importance in education, teaching and empowering, the parent role, caring for credit, saving and borrowing, and growing in the credit union. And let's get started with the importance in education. And I'm going to turn this over to my friend Brenda.
All right, so I think, Sue, you've done a great job of telling us why we are here, but we want to emphasize that our real goal is moving families from financial anxiety to confidence by breaking down complex concepts, making it simple and actionable. So we are looking at a couple of age groups based on the generations. That Gen Z group is the ages 14 to 29. They're facing high inflation, cost of living, and yet somehow over 80% of them still started investing before they turned 21. They are digital fluid. They're blending social media, financial tech apps, and traditional banking. And Gen Alpha, that's the group that's under 14. These are digital natives. They will never know anything other than the digital world. They're likely to never carry cash. They learn through gamification and digital action. What do you think, Sue?
I think the kids nowadays are just so savvy with the computers. I can't even keep up with them, but thanks, Brenda. I'm going to take this as an opportunity to break down a couple money mistakes across the generation matrix with different age groups, different styles, but the same underlying pattern. So if we start with Gen Alpha, they're growing up on speed, convenience, digital, everything, where spending is easy and the value of money can feel unclear at times. Then we've got Gen Z, moves fast with quick purchases, early credit use, and decisions made before fully understanding the long-term impact. Followed by followed by the millennials. They are stuck right in the middle, folks. They're juggling debt and lifestyles, constantly choosing between enjoying today and securing tomorrow. Gen X is stretched thin. They're supporting kids, helping aging parents, managing mortgages, and trying to keep it all afloat. Now, when you get to the baby boomers, they're the ones that play it safe, sometimes too safe, limiting their long-term growth. And then you've got the silent generation. And above all else, they want to protect what they've built. So that kind of shows you the different generations. But the truth is, Brenda, no matter which generation you look at, the same underlying factors are there. You're going to find that there's weak emergency savings, there's unclear spending, and inconsistent investing. So that just kind of breaks that down for you a little bit. Anna, can you help us with our next poll question? Our first one, I should
So
say.
our first poll question, which generation has the lowest financial literacy rate? Is it A, the silent generation, B, Gen X, C, millennials, D, Gen Z, or E, baby boomers? Let us know.
Whoops, sorry. Do you ladies have a guess on which one it is? I know the answer, so I'll see if you, what do you think?
That's a good one. I don't know, the way the way the baby boomers tend to spend, you would think, financial literacy is out the window, but I don't know. What do you think?
What's our poll? What's it look like the audience is thinking, Anna?
There's a few guesses across the board, but
Okay.
I feel like this is a tough question because what you just explained, I feel like you would automatically think of the youngest, but they're the Gen Zs and what are they, Gen Alphas, raised on technology, computers, internet. So yeah, with all of these TikToks and all of these things, you've learned a lot of financial literacy.
Yep.
So it's a tough question. Um, but our attendees are kind of across the board. One saying the silent generation, one saying baby boomers, and another saying Gen Z. So
Okay.
I'm very curious on the answer actually.
Okay. Drum roll, please. Well, according to Money Zine, here's the answer. Gen Z has the lowest financial literacy rate among all generations, with only 38% able to answer basic financial questions accurately. So Gen Z.
Wow.
All right, let's move on to teaching and empowering. And Brenda, I'm going to turn it over to you at this point.
All right. So Sue, this slide is focusing on our Gen Alpha. That's that group of kiddos born between 2010 and 2025. They're growing up, again, fully digital, mostly cashless. And unlike previous generations who interacted with physical cash more regularly, their understanding of money is pretty abstract. They're just numbers on a screen, apps on their phones, and gift cards, right?
Right.
So because of this shift, the approach to teaching money has really, has to be interactive. It's got to be practical and technology driven. And that means combining everyday learning with digital tools that they already recognize and use. A lot of kiddos already have cell phones by this age.
Right.
And here's a kicker. And some of you may know this already, but did you know the US minted its last penny for circulation in November last year?
Nope, I didn't know that. What are we going to do?
I know, right? So after 232 years of production, it ended. No more pennies were minted after November 2025 because it cost too much. It was a cost of 3.7 cents for one penny.
Okay.
So nearly 4 times. So with that in mind, I mean, how do you teach the little ones about handling coin, right?
Yeah, I don't know.
Yeah, but anyway, around the age of 6 to 7, their habits are starting to form, right? They're starting to get an idea about, how things work and what they can have, what they can't have because of money. And even with the scarcity of pennies and eventually other coins, probably, you can still teach them, you can use a 3-jar system that can still work. So basically, make it a game. Help them label 3 jars, one to save, one for spending, and one for giving. And then pay their allowance in cash, right? And allow them to use that allowance to decide which jar gets how much.
Okay.
This will help the child understand money allocation. It'll also introduce the idea of balance and decision making. And from there, like real life activities, you can help them, you know, with their chore money, right? So they're doing a little work, you give them a little allowance for doing it. They connect effort with reward through that. Grocery shopping, that's another way to teach them.
Yeah.
It's an opportunity to take that digital person and say, look, I'm going to clip some coupons through the app on my phone, right?
Right.
And that way they can see savings, they can see the importance of budgeting. And yet another way is also to let them, as they're wandering around the store, realize, I'd love to have this particular item. By teaching them, hey, this is all you have left. This is your spending in that jar. This
Right.
is all you have left. So next time you get allowance, add to that. And perhaps then you'll be able to buy this item that you so desire. This not only teaches them about impulse shopping, which a lot of us adults, me included, are very guilty of, but it helps them with that control and long-term thinking. So very important stuff. And then finally, prepaid cards. That's another way that you put something in their hand and you can teach them to use their subtraction skills, to kind of say, hey, this is a card, I spent this is what's left. So as they grow, basically, financial education has to reflect their environment, which is digitally driven now.
So different from when we grew up, right, Brenda?
Oh, no doubt about it. No doubt about it. Yeah. So let's talk now about our older group. This is Gen Z. These are ages 14 to 29. This age group is one where financial education has to really be simple, direct, interactive, and focused on real stuff, real interactions.
Yep.
And since online behavior shapes financial decisions for a lot of them, teaching starts with those core habits of budgeting, saving, and spending awareness. So credit and debt should be introduced.
Okay.
Things like how interest works, how compound interest works, how credit is built, and why being responsible matters as credit becomes more common, right?
Right.
And then finally, setting goals, tracking those goals, automating savings, and doing regular reviews of their spending. Overall, Gen Z learns finances best through digital interaction, not by lectures, not by I told you so's.
Yes.
Yeah.
I can
So,
relate to that. I've got
yeah.
29-year-old twins, so I definitely hear you there. Okay.
Got it. Yep. You relate to that one.
Definitely.
Yeah. So real quick, Sue, I'll just wrap it up by
Okay.
summarizing those money lessons by the age groups. So ages 6 to 7, you want to make money visible. Introduce those coins, those bills, and explain what money is used for. Show simple and real life transactions like shopping with cash and withdrawing money at the ATM maybe. Ages 7 to 10, build savings habits. Allow them to be part of opening a savings account when you're ready to do that for them. Encourage regular deposits, teach basic budgeting, and discuss the all-important needs versus wants. And then age 11 to 14, now you're getting into the real world decision making. So you can involve them at that level in small budgeting tasks. And a good idea would be something fun, like planning an event maybe, right? You could have them maybe plan a celebration or maybe their own party. And with that, let them determine how many folks, what's it going to cost?
Right.
Set a goal. How do you save for all of this big plan of yours? And that will create a lasting memory about the importance of not just saying you want to do something, but a map to get there. And then ages 15 to 18, preparing them for independence. That's super important at that point because now they're entering that stage where they could potentially start borrowing as early as 18. You want to talk about credit. You want to talk about interests, planning for college together, and then opening a checking account. It's at that point, you know, hey, I want a ledger to see what's coming in, what's going out. What can I save? What habits can I change?
Excellent. Thanks, Brenda. Some of these things that you suggested, ages 7 to 10 learn, I was just reading over and I thought, I don't even know if I learned that in high school. So yeah, they're much younger. They're learning so much. Okay. I'll take over from here. So let's discuss the parents' role. So one of the simplest and most effective tools parents can use to teach money management early on is called the 50-30-20 rule. Its framework helps children build healthy financial habits in ways that are practical and easy to understand, like Brenda was suggesting. It can be used with allowances, gifts, or even small earnings, making it hands-on and consistent. So you want to start with your take-home pay, and that's the actual money that you bring home. And you're going to divide it into 3 simple categories, or think of it like slicing a pizza into 3 pieces. 50% goes to needs. This covers essential things like school supplies, lunches, basic clothing. 30% goes to wants. This is the fun category, as you mentioned, Brenda, things like toys, games, treats, or outings. And 20% goes to savings. And this is the future you bucket, money set aside for goals, unexpected needs, and opportunities down the road. It's a super simple system that creates strong foundations, teaching children balance, discipline, and the value of money early on. And now we're going to explore the parent's role in leading by example. So one of the biggest keys is showing your work, which means be open. Bring your kids into everyday, age appropriate, of course, money decisions like grocery shopping, budgeting, or paying bills. Next, let your children make small money mistakes. Let them spend their money too fast. They might regret a purchase, run out of allowance. That's where the real learning happens in a controlled environment. Then you want to reinforce good habits by automating savings. Simple systems like automatically setting aside money to pay yourself first makes it effortless and consistent. And of course, Brenda, in today's world, we also have to talk about money online because kids are constantly exposed to financial content. So they need to learn how to think critically, spot scams, question advice on social media, and use AI as a tool, not as a shortcut. What do you think of those parent roles, Brenda?
Excellent. Real good stuff. Yeah.
Good.
So I guess the bottom line is money doesn't grow on trees.
Oh, oh my gosh. I think you just took a line out of my 98-year-old mother's mouth. Thank you. Okay. Wow. Okay. And we also need to reinforce that good credit really is everything, you guys, and how to stay on top of it and protect it from the very beginning. So in our online app here at the credit union, if you go to financial wellness and you select credit score and report, you'll get free access to your score, report, key factors, and daily alerts. And you can also use these tools to spot fraud early. You can also add protection with credit freezes for minors. It's known as the Protected Consumer Freeze, and it must be placed with all 3 bureaus, including Equifax, Experian, and TransUnion. And it's free and it's reversible. But no matter what, at the end of the day, try to remember habits matter most. Kids need to learn to track spending weekly, and as parents, we always want to reinforce needs versus wants. And back over to you, Brenda. Let me get you on the next slide. There you go.
Okay. So the importance of credit monitoring. So this is a unfortunate story, but it's a real story. And you probably remember this. It wasn't long ago, not even a month ago, when our manager shared with us that our son had looked into his credit union account and noticed an alert about a change in his credit score. So she helped him obtain a copy of his credit report and saw that a new account had been opened, fraudulently, of course. And she immediately shared with us, her team here, that this is super important. Just remember, check your report, check your credit all the time, even if you don't think you have it, which
Right.
was his case, right?
Yep. Yep.
And we have an amazing, to your point, an amazing free tool here at our disposal, that credit report and monitoring that you mentioned. And I just, when you said your 98-year-old mom, it made me think about this other, thing about what fraud looks like nowadays, with AI, it has evolved so much. It looks very different and can be very convincing and harder to
Yep.
detect. So we
Agreed.
have to keep in mind that some of the old school stuff still exists too.
Right.
Uh, Phishing, those phishing emails, those text
Mm.
alerts, all of those designed to create urgency and make you have a reaction. Data breaches. You can't hardly go a month, without hearing about a data breach with some company. And then
Yep.
card skimming devices at ATMs, fuel pumps, it's awful. And then the oldest and probably the worst, mail theft. Someone just, coming up to your home,
Yep.
expecting you're not there, taking mail from your mailbox. And unfortunately, if you're still receiving paper mail, a lot of that may still have credit information available there. So, yeah.
Yep.
Bottom line is, even financially responsible members can be affected, which is why ongoing awareness is essential for protection.
Exactly. Exactly. And to think her son was only 18 years old and it had already happened to him, right? Just getting younger and
Yeah,
younger.
yeah,
Craziness.
yeah, yeah. It's awful.
Okay. We're on our next poll question. Do you want to take that over, Sarah or Anna or whoever?
Poll question number 2. How long does fraud activity stay on my credit report? Is it A, 1 year, B, 6 weeks, or C, 30 to 45 days?
Any guesses?
I don't even know. That's a good question.
What would your guess be, Sarah?
Oh, a year? That's
Okay.
my guess.
Okay.
Um,
Fair.
thankfully, I haven't had to deal with that I know of. I should probably get a copy of my credit report
Wouldn't
to
hurt.
make sure,
Yep.
but that would be my guess. I
Okay.
have no idea. Attendees are saying 6 months, and one person said 30 to 45 days.
Okay. Well, the correct answer is C, 30 to 45 days. Now that's assuming that you're disputing the fraudulent activity. If you don't dispute it, it can stay on your credit report up to 7 years. Now, wouldn't that be awful if you didn't dispute it and it stayed on there for up to 7 years? So it's really important to
Yeah.
be reviewing it. But thanks for helping us with that one. And Brenda, I'm gonna let you take the next slide, please.
All right. So I believe we are talking about addressing fraud,
Mhm.
and what you would do, jump on it right away.
Yep.
Super important. You want to compose a statement disputing the error, deliver it to the credit bureau, review your bank accounts. Don't assume that it would just be a credit card. File a police report in the city and state where the fraud occurred. Complete an identity theft report with the Federal Trade Commission at identitytheft.gov. And you might even consider changing your bank and credit card numbers.
Very good advice. Thanks. Thanks,
Yeah.
Brenda.
Yeah.
Okay. I'm going to talk about some everyday habits to protect your financial identity. So think of cyberspace in layers. Each habit adds another layer of protection. So here's some everyday habits to protect your financial identity. And these are really simple, folks. Use a long, unique password and a password manager. Turn on multi-factor authentication everywhere. Keep your devices and apps updated and locked at all times when you're not using them. Be cautious of public Wi-Fi and social media privacy. You want to monitor your finances and securely store or even consider shredding sensitive documents. Here's what I didn't think about, Brenda. This was a surprise to me. Secure your home Wi-Fi by changing the default router password and using a strong, unique one. I thought that was a good
Yeah.
suggestion.
Yeah, it's not one that you think about
No,
at
not at all.
all.
Not at all. And that's going to take us on to saving and borrowing. And Brenda's going to tell you a little bit about that.
All right. So we at the credit union are very fortunate. We're able to offer accounts for all ages, for every generation. And so our shared savings account is our basic membership account for all of our members, including children. The moment they get a social security number, bring them in. It has a low entry fee of $5 minimum that actually is not a fee, it's just a minimum balance that's required and a $1 fee to join. Youth checking, that is for our group of youth ages 13 to 25, young adults. It's a starter checking account designed for teens and young adults. It has no monthly fee as long as there's activity, no minimum balance required, includes a debit card and up to $15 a month in ATM fee rebates with qualifying activity. And then the Dream Plan. I love this one. It is a goal-based savings account. It's one that, say you want to get a car, you want to travel, you have other major goals. It simply requires a $25 opening deposit and a minimum $25 monthly contribution. And it's a great one to encourage that structured long-term savings habit.
Yep.
And finally, that emergency savings is exactly for what it title reads. It's designed for the unexpected. It has no minimum balance, no fees, and it's intended for easy access when those emergencies happen.
Yep. Can you imagine if we opened a Dream Plan when our kids were like firstborn or something? Just that'd be terrific, right, Brenda?
We could pay cash for a lot of stuff, right?
Yes, we could. Yes. Yes, we could. That was good
Yeah,
information.
no doubt. And
And
then,
I'm sorry, go ahead, Brenda.
sure, I just want to talk about this one. I'm anxious, I'm excited. I love this one because we're talking about our young adults now who are looking to get grounded and start real life, or so they think, right?
Right.
But to finance, simply put, these young adults have a lot of great options with the credit union. They have the available starter credit card. Once they turn 18 years old, the Visa Platinum Starter Rewards Card is designed specifically to help them begin building credit. And then for members purchasing their first vehicle, we have a first-time auto loan. This offers a great pathway for those first-time borrowers.
Definitely.
We also offer Cadet Academy loans, and this is specific to those students who have been accepted into the American Airlines Cadet Academy. This loan is especially for tuition, housing, and other costs. And then finally, the overdraft protection loan, and this is for checking, available for all members over the age of 18, and this can also help support credit building activity.
Very good.
Yeah.
Thanks, Brenda. I wanted to share some investment account options for kids or teens. So first, we've got the UGMA, which stands for Uniform Gifts to Minor Act, and the UTMA, Uniform Transfers to Minor Act. Both of these are custodial accounts. They're managed by an adult, but they're owned by the child. They allow investments like stocks, bonds, mutual funds, and they're transferred to the child at the age of maturity. That's typically between 18 and 25 years of age, depending on the state. Next, there's even a Roth IRA for kids. I didn't even know about this for kids, Brenda. So this Roth IRA for kids, it's a powerful retirement account for children with earned income. It offers tax-free growth and tax-free withdrawals in retirement. In 2026, contributions can be up to 100% of earned income with limits of $7,000 to $7,500. And finally, this is one I'm very familiar with. I used it to get my twin daughters through college. It's the 529 College Savings Plan. It's a tax advantage account designed specifically for educational purposes. That was super helpful at our house, especially when you're putting twins through college, right?
Right. I'm not surprised that's your favorite.
Okay, so I just want to cover some key takeaways that we've discussed so far. First one is start early and stay consistent, because financial literacy it's a journey built over time, not overnight, right? It's not a race, it's built over time. Focus on mindset, because money's not just about spending it, it represents both freedom and responsibility. You want to leverage technology by using financial tools and apps, but always reinforce the core principles behind them. Talk often. Make money conversations normal, open, and ongoing rather than avoided or uncomfortable. And here's Brenda's favorite, lead by example, because children learn more from what they see than what they're told.
True.
Yep,
It's true.
absolutely. Okay, Brenda,
Yeah.
you want to tell our parents about some homework ideas we had for them?
Oh my goodness. I don't know how much they'll like the idea of homework after working all day,
Right, right.
But the whole reason for this is to encourage a better outcome for all of us, the parents and the kids alike. So posing some questions around the dinner table or maybe at dessert time when everybody's
There
happier.
you go. Yes.
And just throw it out there. Talk about the things that make a difference. And question one is asking your family, what is one financial goal we can work on as a family? Number two, how do we decide what is worth spending money on? Number three, what does financial security mean to you? And I'm imagining the 3-year-old saying a Big Mac or some chicken nuggets or
Yeah.
something. And then number four, how can we support each other's money goals? And
Terrific.
we want to keep you engaged and make you laugh a little, but these are important questions. And
Yeah.
so don't let the dog eat your homework.
Exactly. And it's it's so important, as we were saying earlier, to talk about money, and it's not taboo. I feel like when I was growing up, nobody talked about it,
No, I had a great example though. I do remember my mom, clipping coupons back in the day of the newspaper and other, paper items where coupons and things were an option. I remember her really planning meals around what was on sale, you know. And so I guess when you grow up with less, financially, you come out with more in other ways, maybe.
very,
So those were
yep,
a great example.
yep, that was definitely right. I clicked the slide too fast, but that takes us to the questions area.
Questions out there, folks?
I don't see any questions right now, but to our attendees, if you have any questions, feel free to drop them in the audience Q&A section of the Slido, and we'll use the time at the end to volley some questions to you guys. So.
Great, thanks, Sarah.
Mhm.
Okay, Brenda. Brenda's doing such a great job, folks, and I love listening to her. So I'm going to send this one back over to her. Can you tell our members how we can assist them with building their credit?
Absolutely, Sue. So with credit score and report, members have access to that tool, credit score and report.
Okay.
They're able to see debt to income information. They're able to create credit goals, see personalized loan and deposit offers, and learn additional financial insights to better manage credit. So you can't beat it. We've got a ton of great stuff here at the credit union.
Sure do. Thanks, Brenda. I'll let you take this one too.
Okay, and this one I'm most excited about because it is brand new.
Mhm.
As of today, I don't know, I haven't checked online yet in my online banking, but we have a new added protection available. Online banking users who are enrolled in Savvy Money or the credit reporting tool will gain complimentary access to Allstate identity protection beginning today. We get
Great.
to announce this first. Isn't this cool?
Yeah.
So users can access the service via the Savvy Money credit score within their online banking app, specifically under Alerts tab. So they have to go to Alerts to see it.
Okay.
And with this, Allstate is offering comprehensive identity restoration, which helps restore and rebuild financial health if fraud occurs.
Oh boy, that is
Isn't that
excellent.
amazing? Yeah,
Yes.
yeah, yes. And then Sue, if it's okay, I'll take this one
Yeah.
too. And
Thanks.
I'll tell you, sure, I'll tell you about the budget and spending hub. You can't have missed it. At this point, if you're logging in, you've already seen this amazing widget. It's right above the budget and spending, well, rather right above your account. You'll see the budget and spending hub.
Okay.
You'll see your real-time information, interactive, seeing your finances as they happen. Is that crazy? And then you have the ability to connect your accounts at other financial institutions. You see spending by category, charts and analysis, and generate budgets based on your spending or savings. And if you choose, you can allow the system to generate a budget for you based on your past history. So it's
Great.
amazing, super cool. Yeah. So to access it, you can't miss it. It's right there when you open the online banking. Simply click on the budget and spending hub box
Okay.
and click get started.
Great. Thanks, Brenda.
Yeah.
Well, I want to remind everybody that Brenda and I and the rest of our financial team is here to guide you with some practical tools and support. We can help you with boosting or rebuilding your credit score, creating realistic budgets and tracking your spending, strengthening your savings and spending habits, managing your checking and savings accounts effectively. We can help you avoid those costly payday loans, and we can help you explore some alternatives to bankruptcy. We also offer educational seminars and webinars throughout the year to help you stay informed, confident, and empowered. So if you're ready to take the next step, schedule a free, yes folks, that's correct, a free confidential appointment with one of our counselors. You can reach us at 833-346-9355 or email us at financialwellness@aacreditunion.org. Okay, turn it over to you, Sarah.
Thank you, Miss Sue. So for those on the call who aren't members and to become members and start their member journey today, can easily do so by scanning that QR code and using promo code BD4412 at the end of the application. And that code is going to take care of the new member deposit of $6, so you have nothing to lose. Plus, once you're a member, you're always a member, so that means if you decide to take another job opportunity outside the air transportation industry, you can still retain those credit union benefits, still remain meeting with your financial advisors like Sue and Brenda. And then you get to share those benefits with your family, your permanent household members, and coworkers who are eligible to join. So get those kids signed up, get their dream plans opened, because whenever you refer them, you get $25 for each referral, up to 10 of those. Definitely take advantage. We have some really awesome 90th anniversary specials going on right now. I will hit to that. Tomorrow, our 9% share certificate opens. So you got to get those kids their share certificates. Sue, next slide, please.
Sure. Do you want me to go keep it there or move on?
Right here is good. Thank you. So another QR code to scan. That one was going to take you to our offers page. It'll talk a little bit more about our offers we have for this quarter, and you can save up to 0.90% annual percentage rate on your next auto loan. You can earn up to $90 whenever you open up a new checking account, set up direct deposit, and make at least 9 debit card purchases per month. So earning $30 monthly for 3 months. You can use that $30 to give some kids an allowance or something.
Yeah.
Put it in a save jar. Another exciting offer we have is a total of 9 winners will win $10,000 each in our 90th anniversary sweepstakes. There's over 20 different ways to get entries, but you must register first to be eligible to win. So check out our offers page, scan the QR code for more details on those promotions and how to register for the sweepstakes. And like I said, tomorrow our 9% share certificate opens, and it's one per account. So if your kids have an account, you can open one for them and use that. You can show them to see how their savings can grow.
Yeah.
Uh, but enough about that. We can go over to some Q&A. I think I had a question for you
Okay.
guys. Let's see here. Speaking of allowances, are allowances still effective, or are there better modern alternatives that you guys know of?
I thought they were still effective. Is that not?
I don't know.
I mean, I know I used it with my kids. I mean, then again, they are 29. I don't know. Maybe somebody in
Yeah,
our audience could share. I think they're
yeah,
still effective.
I would think so. I mean, I think you can get creative with it, you know. I mean, it's not too far still from what I remember, but you know, the better the grades and maybe incentivize that,
Yeah.
chores, the
Yeah.
better job you do, the more you get for that, there are a ton of different ways, or maybe trips. Maybe, we're here in GFW. We have just so many different places that kiddos and young adults can go and enjoy. Hey, if you accomplish this, then your reward is this.
Right.
So kind of, I think we're all motivated to some degree by money or
Yeah.
and if we are learning that, if we relate our work or, accomplishment to that, then yeah, a little bit
Yeah.
more motivation. But yeah, I would always think no parent would not be like, yeah, you get an allowance. May not be a whole lot, you know.
Right. And it might be
Yeah.
distributed different now, as we were talking, because you mentioned something about prepaid cards as a way for kids to learn to budget their money. So maybe nowadays you put the money on a card. I mean, that part has changed since somebody
Absolutely.
like myself raised children, but I mean, that would make sense to give their allowance, if it goes on a debit card or something, and they have to, that way they can spend their money wisely and keep track of it. But that's a great question,
Yeah,
Sarah. That was a good one.
yeah, yeah. And I think, Sue, you're probably closer to right in terms of that digital
Yeah.
way of thinking and managing things now. So yeah, probably a prepaid card or something.
Yeah.
You got to learn, Sue, when you get grandkids. You got to
I
send
do.
them money. You got to learn how to transfer them money.
Oh, thank
They're
you,
gonna be
Sarah.
they're gonna be showing you, Grandma, this
Yeah.
is how you do it, so you can send
Yeah.
me more money.
Exactly. It's so easy,
Uh,
Grandma.
mhm. Another question, how early should kids learn about credit scores and debt? Sorry if you already covered this, but
Well, in my opinion, it's never too early. You just have to consider the audience. They won't necessarily understand it to the degree that an older child would, but you know, in the same way we talk about the better your behaviors with, maybe schoolwork or other things, then the result is an incentivization of a prepaid card or whatever. Well, in the same vein, the better you handle your credit, you pay on time, you're never late, you pay extra sometimes, you rarely use a credit card, then you can show how, look, my score is here, and maybe the green is the best, and you can, by comparison, show my score here would be, compared to the orange, and it progressively changes color the better and higher I get. So you have to, I guess, think about it to, I guess, what degree your child will be able to understand it,
Yeah.
but it's never too soon to start teaching them. And again, behavior, our own behaviors are what are the better teachers than anything we can say, you know.
That's true. Another good question.
Thank you. Thank you for that. Last question here. What mistakes, if any, do you often see families make when teaching kids about money? Just if you guys have had any experience with your members.
Yeah, I
Yeah.
see, I counsel a lot of young adults that perhaps didn't have the opportunity to learn the value of money. So if they want to buy something, some of these members I'm working with, they just go out and buy it. They don't think about the long-term consequences like the interest that they're paying, or if they can't pay for this particular purchase, how it's going to hurt their credit. I see that a lot in young adults. That might be where it's just really important to share with children. Whenever you get money, the first thing you want to do is pay yourself. I mean, age appropriate, right? You can't teach this to a 1-year-old, but maybe somebody, you know, a youngster in elementary school, when they get Christmas money or birthday money, that would be a great time to start introducing, before you go out and buy something special for yourself, it's important that, we talk about this 50-30-20 rule, where we got to put some money set aside for, I don't know what they might need, what's essential when you're, in elementary school, but you can certainly implement the 20% savings, right? Pay yourself first. Explain to them, this is really important. You want to pay yourself first. I think that would be something to introduce as soon as possible. But yes, to answer whoever asked that question, I myself have found myself working with a lot of young adults that have got into some serious debt because they just, that impulse buying, maybe because they have access to all those digital apps, and when they want something, they can buy it right now, or that buy now, pay later, that's just been awful for some people. So yeah, I do see it a lot. Brenda, how
Yeah.
about you?
Yeah, same. And what I usually recommend as a first step, like we're, going through this recovery phase, I'm asking them if they feel comfortable taking the apps off their phones, because when access is so easy, that doesn't mean the money came easy. It just means, now you're not swiping the credit card, you just tap, tap,
Mhm.
So that digital opportunity that is just always there can potentially create a lot of financial burden when it's not used the way it should be.
Yep. And
Yeah.
even us
Thank you.
as adults, I mean, I know I took my credit card off of my Amazon account because I found it was so easy to go shopping online, find something, and you
Right.
just buy now. And now when I have to put my credit card in, I think, I'll find myself thinking about it maybe for 24 hours. Do I really want to buy this before I hit the buy now button? It just slows
Yeah.
down those impulsive purchases. That's even with older people like myself.
Yeah. Yeah. I think once you have to think about it, it gives you a chance to determine one of the questions we ask the parents to consider, how important is it really?
Right. A need or
What,
necessity. Yeah.
yeah.
Yep.
Yeah.
Yeah. So it seems like we need to have like a young adults and money workshop this summer.
Okay. You
So
you
my fellow Gen Zers, we need to get better. I'm disappointed in us.
yeah.
Well, you're not alone. If you
No.
notice, I think what Sue's summary of all of the generations is, what was that, Sue? Not enough savings, no emergency savings, and
Right.
still a lot of
Inconsistent
debt.
saving habits. Yeah. Yep.
Yeah, so the habits are the same by generation, unfortunately.
Yep.
It's just, I mean, you're older with the same problems and you should know better,
Exactly.
Yep.
Exactly. Yep. Struggling to save, but also live,
Yeah.
enjoy the now. Um,
Yeah.
so thank you so much for sharing all that information. Um, and thanks to our attendees for joining us today. If we didn't get to your question, or if you have something a little bit more personal you'd like to discuss, we'd love to connect with you. Just let us know in the survey that you should be receiving soon in your email boxes that you'd like a financial wellness counselor or credit union representative to reach out, and we'll follow up early next week. You can also indicate that you'd like a copy of this presentation along with some helpful financial wellness tips that we'll send out early next week as well. But be sure to visit our event schedule on our website for more details and the topic lineup for upcoming financial wellness webinars. Be sure to stay connected with us on social media. Follow us on Instagram, X, and LinkedIn, and be sure to like and subscribe to our Facebook and YouTube channels where you can watch previously recorded webinars just like this one. But on behalf of Anna, Audrey, Sue, Brenda, myself, and the entire credit union team, we truly appreciate you guys tuning in today. Have a wonderful rest of the week and weekend. But to my amazing co-panel, any last words before we close this out?
Just that it's been a privilege to be with you today. It was a great topic. I think a lot of people could relate to it.
Definitely.
Yeah. So just, and I'll just throw this in real quick, Sue. A few reminders.
Okay.
Start or revisit your budget. If you don't have one, create a budget. Automate your savings. That way you're not thinking about it as an afterthought, like I should have put a little something away. Track your spending. Let your kids see you actually look and see, oh my goodness, this pie chart in the budget and spending tool is out of whack, right?
Yeah, right.
And then look for areas to cut back. If you see yourself, going overboard, buying a lot of stuff because it's on sale that you don't really need, but it was on sale, stop it, because your kids are watching. And build and grow your emergency fund. I mean, emergencies will happen, and
Yep.
that's a fact. So,
Absolutely.
and to your point, Sue, the way you always love to sum it up, celebrate your progress.
Yeah.
Every win counts.
Everyone counts. It's a journey, not a race. Right.
Yes.
I have to remind myself that. Yes.
Thanks, everybody.
Thank you
Thank
guys.
you.
See y'all on the next one.
Okay.
Yes.